Welcome to the Michael Yardney podcast, where we help investors get clarity in the chaos of the many mixed messages to allow them to develop financial freedom through property investment and smart money management. And today I'm going to interview my good friend and business partner, Brett Warren, the National Director of Property at Metropole. Look, Brett's somebody who's walked a path that so many of the listeners to this show are striving to follow. From starting out as a property investor himself to becoming a trusted buyer's agent, a sought-after property strategist, and now leading Metropole's property team nationwide, has seen it all. So in this episode, Brett's going to share some of his personal journey, the highs, the lows, the lessons he's learned along the way. We're going to dig into how he transitioned from investing in his own backyard to helping others build wealth through property, and what it takes to achieve long-term success in today's ever-changing market. It's not just about Brett's story. This episode's packed with actionable advice as Brett shares his practical tips to help you avoid the mistakes, to stay ahead of the market and build resilience in these challenging times we're experiencing. So if you're ready to gain some invaluable insights from one of the sharpest minds in the property industry, stick around. Let's dive into my conversation with Brett Warren.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favorite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?
Welcome, Brett.
Michael, good to be with you in the hot seat.
Yeah, well, I know that you and I chat every week on this podcast, and while in general you ask me lots of questions, I wanted to turn the tables round today, as they say, and ask you about your property journey and your lessons along the way. I want to inspire those who are watching this, listening to this, who want to be successful in property, because it's been a long but an interesting journey, and you've reached probably... Would you ever imagine you would have got to the levels where you are now, being an recognised industry expert?
No, it's quite interesting, Michael. One of the stories I do like to tell is back in I think 2005 or 6, when I was looking around to get into property and looking for mentors and things like that as well. My wife, I think she threw a Yip magazine over it to me and said we should go and listen to this guy talk at a seminar, and that was actually you, Michael. So it's even more amazing when you think that I started a seminar, and now I'm obviously one of your friends and business partners, and we work quite well together. So it is an amazing journey, and I don't normally like to go on about myself too much, but as you said, in the spirit of kind of talking about people's journey and how they got through those things, I'm more than happy to help out.
Well, you came from humble beginnings, so maybe you can share a bit about it. So yes, it started by coming to a seminar. Now you're conducting those seminars, but what even drew you or Abby to the idea of property investing in the first place?
Yeah, look, it's something that was always within my mindset is property and becoming wealthy and being successful. And from an early age, I think I had a very strong sporting background, and I thought that was my journey to being successful and wealthy. And for one reason or another, mainly injuries and other things with life, that didn't quite eventuate. And property was always there as another passion and another hobby. So it was actually helping people. I actually really enjoy and passionate about helping people. But there was also a thirst for property, and I thought, to become successful and improve my circumstances, property was going to be that vehicle and that avenue to take. And I just didn't know how to go about it. And that's probably why I'm passionate about helping people now, because I've been through that journey and thought the same things as well.
Well, I know that you were initially a personal trainer. Is that right?
Yeah, after my sporting career, I think the only thing I knew was health and fitness and my body and how to work out. So I kind of helped other people with that kind of thing. And then I had an interest for business. I became a business manager as well. And it kind of worked from there and bought my first investment property at a young age. So I obviously enjoy helping people get into that journey.
Was there property in your family? Did your parents own property? Did Abby's parents have investments?
No, they didn't. We were very middle class. We had a great upbringing. My parents were very loyal, very helpful, particularly with values and morals and things like that as well. But it wasn't something that they were invested in heavily. And I think that's the other thing. We learned a lot of lessons from our parents, good, bad, or otherwise. And certainly becoming wealthy and investing wasn't one of those lessons. So I had to look elsewhere.
Sure. Well, it's not an unusual story, but it's interesting that you, and it's a part of your mindset, saw that there were opportunities. So other people would say, it's not for me, it's only for those rich people over there. They're lucky, they're greedy, they were born with a silver spoon in their mouth. But I think your lesson, and that from a lot of our clients at Metropole, is you actually don't need a huge income. You don't need to come from wealthy parents. Sure, it helps. But in Australia, we're so lucky that anyone with financial discipline can get into property investment.
I think discipline's a really, really important word. I think it's something I've learned from a very young age is, delayed gratification and discipline and putting in the hard work and doing that. And you're right, it's very hard to find all that information and learn from people when you haven't. So you've got to look elsewhere to do that.
Now, I find it really interesting because I find a lot of people are very disciplined in some areas of their life and not in others. You're actually an exception because you are disciplined in your money habits, in your investment habits, in your business habits, but also still in your personal life. I know that you exercise a lot, you have special diets, you have those, you're still having those ice baths in the morning?
Yes, I am. It's a lot easier in summer than it is in winter. But look, I think getting to this age where if you are exercising, your recovery's not as good as it used to be. And certainly those saunas and ice baths certainly help me be the best I can and exercise as much as I can. So that's all part of the process.
So it's interesting, though, I guess the point I was starting to make is that some people are very disciplined in some of those areas, but they're not necessarily disciplined in money or finance. So it actually has a lot to do with their headspace and their mindset. So it's a credit to you that you are actually able to do it in a number of areas. So let's move forward through your journey a bit so people understand a bit about you. And I think there's a couple of reasons why I want to do this. Firstly, to educate people, but secondly, you're on this podcast every week. We share the stage together. You help a lot of clients. So I think it's really important to be careful who you listen to, because in today's era, it is too easy to seem like a guru on social media, but you've been in property a long time. So how did it start? Let's walk through your journey, please.
Yeah, so look, I agree. I think, you've got to understand who you're getting advice from and their background. And if it's only the last 5 years or minutes, it's probably the wrong person to be getting advice from, and someone who's been there and done that. So look, I started at an early age. I was playing sport professionally. I knew I wasn't going to be traveling. I had a passion for property. So I entered the property market and I was lucky enough to get a few properties under my belt. I found my way from WA to Queensland, and I'm living in Brisbane now. And one of the first things I did was ask the Metropole Brisbane for a job, and they turned me down because I had no experience, which is even funnier. And which was fair enough. I had more passion and I probably had a bit of experience there with a couple of properties under my belt. And then I just persisted. I keep knocking on the door, and there was an opportunity for, I guess, a bit of an apprenticeship, wasn't it, Michael, when I first started, a bit of a junior buyer's agent, although I was probably about 30 at the time. That was about 2010. I joined the team, and within probably 3 to 6 months, I picked it up reasonably quickly, probably because I knew the background and I'd follow you for a long time. And I read your first book of How to Grow a Multi-Million Dollar Property Portfolio, and that kind of became my Bible. So I lived that, but then was also able to help our clients live that as well. And we were very successful with helping clients to get into the Brisbane market during that time.
And then you evolved from a buyer's agent to a property strategist. So you didn't just implement the plans, but you actually created the plans for our clients. We always worked at Metropole in the process of strategic purchasing. And at that stage, we had offices in various states, in 3 states. So we never had just properties in our own backyard, and we've never had a stock list of properties. So you implemented plans initially, and then you started putting together plans. That's evolved over time because the plans that we offer clients today are very, very different. Maybe you could just explain a little bit about that.
Yeah, I think we just did a lot of things, verbally and in writing and things as well. But now we've got I think technology takes over, doesn't it? We've got this amazing software now that we can map out the next 20 years, and we can change the rents and the inputs and the outputs, and it's quite a thorough system to get an outcome. And I've actually enjoyed being part of that. And I think that the on the ground perspective, we talk about art and science a lot, don't we? And the science is the numbers and the data and the detail. But I think that's strengthened our team by having people on our team that have actually been there and done that. They've had the ground level perspective and they can actually bring that back. I often get a lot of clients saying that, oh, look, I can put the numbers together myself. I know the data and the detail, but it's lacking that perspective. And I think, having something or being that perspective is incredibly important. And now that we can offer that to our clients. So I really enjoyed that as well. I enjoyed the making new things and putting things together and then, helping people with the outcome.
Well, the people who put the plans together at Metropole come from a property background, but they've all got, I should say, a various finance experience, property experience, mortgaging experience, structuring experience. So there's a whole depth. So we evolved over the time you were with us. So we started as property buyers agents and property development managers. We added property management through Pam, my wife, who started property management in Melbourne and in Brisbane. We've been in Brisbane since 2006, Sydney since 2008. And then with Ken Race, we developed wealth advisory, and we've got a financial planning arm, and we had a long time a finance arm. We still work closely with finance strategists. So I think you and I have been on an interesting journey personally and for clients. And now you're at the point where you manage a team, and we've got over 80 people in our company around the 3 states and offshore helping clients. We manage over $2 billion worth of assets for our clients through property management. And so what have been some of the highlights of that journey?
Look, I think the ability to help people was great for me, but also the ability to grow and learn. As I said, I think I kind of craved growth and learning new things. And I think, you've always provided that for me as a mentor, Michael. I had other mentors in my life that helped me in other areas and other places as well. So I think the ability to grow, and something that we're conscious with now with our team and my team as well, is the ability to actually provide a pathway for people. I guess if I had have stayed a buyer's agent, I may not be here. I think, but the ability to grow into the business and step up a level and be given an opportunity to do so and have the belief and the confidence to do so, they're my highlights. I think, I did have to pinch myself a little bit, I guess, what's it now, 6 or 7 years ago, Michael, when we kind of joined forces to take the Brisbane team to the next level. And I think you slid a letter across my desk that had the word director on it. My mind flashed back to 2005 and 6 when I originally, first met you at one of your seminars. And to think that I was now a director was a pretty big highlight for me. And I was pretty proud of what I'd achieved.
Well, let's go back a step again. When you first started investing, what were some of the challenges you faced in those early days of investing? How did you overcome them, I guess, is important also to give other people some ideas.
Yeah, look, knowing where to start, knowing how to do things. I always thought to become wealthy and successful, I'd have to buy and flip a property or do something crazy. But through mentors and yourself and other learnings, it's just a series of small events and small steps. And I think having a mentor is really, really important. Knowing where to start, knowing that you start with the end in mind. You don't just go out and buy a property and kind of hope for the best. And that's probably how I did start my journey. I was lucky
like most people do. Yeah.
Those kind of challenges are hard. Obviously there's obstacles with finance. There's ways to do different things and where to buy and what to buy and why to buy there and why not to buy there. And I learned pretty quickly with a lot of things when I was growing up that, rather than trying to go out and do my own thing, find someone who's done it, and not just done it for a couple of years, find someone who's done it for 20 or 30 years and has been very successful, has got the runs on the board and can kind of, fast track my success. I kind of often hear you say that it takes 30 years to become wealthy and successful because the first 10 years people are making mistakes and not knowing where they are.
So, Brett, now that you're a national director of property at Metropole, maybe you could explain to our listeners and our viewers a bit about what that involves, but also now having a national perspective, how's that changed your view on property?
Yeah, look, it's good. I've really, again, on the bounds of stepping up and growing as a person and a leader, I've really enjoyed that challenge. I think the good thing about your system, Michael, I've often heard you say it's simple, but it's not easy. And I mastered that in Brisbane, and now it's really, I really enjoy going out and looking and mastering it in Sydney and Melbourne and getting to know those markets as well and bringing those systems and procedures to those markets. But it's also still seeing clients, but I've also got a whole heap of other clients now, and that's our staff. And I'm really passionate about our staff and helping our staff, and we invest in our staff a lot. So, I guess helping those people, leading those people, implementing these systems, we've got to evolve as a business as well. So, one of the things you did very, very early on was every 3 or 4 years you evolved and kept up and changed things. And that's something I really enjoy being a part of as well.
Well, let's talk about how to help aspiring property investors, then if you like helping, people would be saying to you, look, you've been investing for a couple of decades now. You're lucky. It was easier then. Now, there's no doubt that it is challenging to get finance at the moment. There's no doubt that we're living in interesting economic times, and inflation's lasted a bit longer than we expected. Interest rates remained a bit higher than we expected. Was it easy when you started, Brett?
No, absolutely not. It was not easy. I think I outstretched myself. I overcommitted myself. Luckily, I was probably more into sport and I didn't have a lot of expenditure and things as well. So, but no, it was hard. I remember racking up credit card debt because I had to pay my mortgages and things like that as well. So it definitely wasn't hard, but I guess I was lucky.
It definitely wasn't easy.
It definitely wasn't easy. Sorry, my mistake. It definitely, absolutely wasn't easy, but it was difficult. And I think there's challenges on all fronts, but you've just got to kind of find a way. You've got to find a way to make it work, and that's what I ended up doing. I was committed and dedicated to making it work.
So, what advice would you give somebody who's starting out today?
Educate yourself to start with. Understand why you're getting into this, what you're doing. Understand the financial commitment. Understand the costs involved. Prepare for things to go wrong. And one of the things I probably didn't do is I really overcommitted. I definitely overcommitted. There's a saying that what is it? Bite off more than you can chew, and chew like hell. I was probably even more a level above that. So do things within your comfort zone. Always have a buffer in place. Prepare for things not to go to plan, because that's generally what will happen. So, I guess that's my advice. And also, if you are starting out, speak to someone who's been there and done it and can put a plan in place and help you do that. And not someone who's been doing it for 3 or 4 years, but maybe 3 or 4 decades and multiple property cycles is important as well.
I think that's very important. So we have had a number of good years in property. Yes, 2022 is a bit tough, and sure, the Melbourne market has underperformed, but almost anywhere else, if you would have bought over the last couple of years, your property would have increased in value. If you put 20% down, your equity would have doubled, even though the interest costs and the holding costs were a bit higher. So some people are going to have a bit of a false sense of security. So I like your message of having a buffer in place and understanding the ups and downs of the property cycle. Having now been in property and advised clients for a number of decades, what are some of the common mistakes you see investors make?
Yeah, look, I think one of the most common things is obviously targeting cash flow. It's so easy to get sucked in because everybody's struggling with mortgage repayments and cost of living pressures and fuel rising. So to automatically think, oh, gee, an extra 10 or 20,000 would be great. I think that's a real trap. And I know a lot of people have been caught out with that, particularly in the last 3 or 4 years when they're getting $10,000 cash flow positive with interest rates at 2%. And now they've got stuck with a property that's probably not performing, and they're having to contribute to that property as well. So I think not having that focus is a big mistake, but then also understanding why not to have that focus and how to avoid, I guess, getting stuck with a property that's going to do that. So my advice is to, really the only thing you should not negotiate on is the capital growth of a property. And we speak at length about that because that's the life-changing thing. An extra $10,000 is great, but it's not going to change your life. But a property doubling in value over a 10-year period will have the ability to change your life. And that's what it's done for me.
Well, it's a long-term game, as we often say, and so therefore, at the end, when you eventually get out of the rat race and live off your property portfolio, the majority of the money you have, the assets you own, will be the capital growth of the property, not your cash flow, not the money you pay tax on, not the rent, and then you can get the capital growth. So I think most investors start off not understanding how the property market works. I remember when I used to be a property strategist and sit with people, they'd come in and say, I want to buy an investment property so I can pay for the kids' school fees. I want to buy an investment property so I can go overseas on holidays. That's not how property works, is it?
No, definitely not. It is a trap, and again, it's not a reason to invest.
Okay, what about emotions? I know that we speak every time we get together about the importance of having a strategy, but we're human also. Most humans, most Australians are not very good at separating the emotion side from their investment decision.
It's hard at the start, isn't it? Particularly at the moment, Michael, with interest rates rising, you can see your cost of contributing to properties. It's quite emotional. You kind of feel like it's going to go on forever. And even when there's a good time, you think it's going to go on forever, and a bad time, it can be a bit of a roller coaster. But I guess we often talk about this. Once you've kind of been through that cycle once, you've been through the roller coaster, you start to identify the time of the market and the state of the market. I know, we kind of talk about it quite often, but we don't get emotional about it. We just recognize that it's, oh, here we are again. We've got to deal with it in this particular way, just like we did last time. And I think that can be difficult for first-time investors and people who are just going through things for the first time. There's no light at the end of the tunnel because they're really focused on what they're doing now. So emotion is a difficult thing to kind of get through. But again, if you can have a strategy and you can come back to the cycles and you've got someone who can reassure you, it's a lot easier to get through.
It's very easy to say don't be emotional about it because we've all been there and experienced those challenges and those emotions. But it's, I think, having somebody by your side who's been doing it for a long time and having a strategy, having a plan, understanding what you should do and what you shouldn't do makes a difference. But when people ask me, what's the big difference between those small group of people who are very successful and the average investor, I'd say it's their mindset. I'd say it's their habits. And that's something that we speak about, and I've seen you grow and mature, and now you're mentoring clients and also our team. How important is mindset? How important are our money habits?
Massive. I think that's the number one thing. I think having the ability to have an abundance mentality, having an open mind, having a growth mindset, always being open to opportunities. I think a lot of people have a closed mind. They're not willing to look outside their comfort level, and things as well. And that's what we, help our team with as well. So having that growth mindset and breaking away from just the everyday and learning new things is important. Like yourself, Bob, it's quite amazing. I think you probably read more books and listen to more podcasts than I do. And it probably should be the other way around. But with kids and things like that, it makes it a bit more difficult. But it's amazing that, you still do that as well.
Well, I'm still wanting to grow. In fact, this morning I had a 3-hour session with one of our coaches. So I have Mark Creedon, who's your business coach, my business coach, our business partner from Mastermind Business Accelerator, as one of my business coaches. And I also have Simon Bowen in a small mastermind group. And I think one of the things I've learned is that you can only learn so much from the internet, from blogs, from podcasts, from reading, but actually being part of a community of successful people and getting away from the rest of the world for a short period of time, as you and I did only it was a week ago on the Gold Coast, and got away, as I've done with Simon Bowen today as well, makes a big difference. And that's why quite a number of years ago, we put together Wealth Retreats, started in 2006, 2007, and we've run that every year for, well, other than COVID since then, where we get together with a small group of already successful entrepreneurs, business people, and investors to actually get away from the outside world. And we work on the mindset. Yes, they get a lot of property strategies and finance and business advice from our business partner and coach, Mark Creedon, but they actually work on the next 5 years of their life, what life's going to be like, because it'll be 2025, so what life will be like in 2030, in 5 years' time, in all areas. So they go into Wealth Retreat with a whole lot of ideas, but they come out with specific plans. So it's not just property, but in all areas of their life. But I think one of the big factors there is the community, the ability to rub shoulders with other people, Brett.
It is. Look, and to be honest, Michael, to say it's life-changing, that probably gets a bit overused these days, but that's an understatement, because I probably wouldn't be sitting here if it wasn't for Wealth Retreat, because that's a time where you actually go, how often do you get to go away and work on yourself, for 5 days, your mindset, set your goals, what's working, what's not working, and then actually having, some of the lessons you learn aren't just from the faculty, it's actually from the community and from other people. And I guess the good thing about successful and wealthy people, they're willing to give up their time, they're willing to give advice, and it's always those little small nuggets. It's never something huge that's going to change the game. It's just something small and practical that you can implement and find a way forward. And I think it's an incredibly invaluable experience.
Well, the community is important, and we've got some great ideas about how to actually extend that. Also, some interesting joint ventures have come from it. I know personally I've had 4 significant joint ventures from it, including Ken Race, who was a presenter one year, and I said, no, you're now going to be my business partner. And Rolf Schaefer, we set up Metropole Finance. So if you're wanting to make 2025 or the next 5 years the best 5 years of your life, go to wealthretreat.com.au. I'll leave a link in the show notes. Find out about it. You can't book in. What you've got to do is express your interest, and we'll have a chat to see if it's appropriate for you. Don't count yourself out. And it comes with my money back guarantee. I've always been happy to do that, because most people get the value for their investment in the first day, don't they?
Certainly do.
Now, getting back to property, sorry, I got sidetracked there, but I'm passionate about wealth retreat because we're thinking about it now. So we talked a bit about the mindset, and we talked about the importance of resilience to get through things. And that helps if you've got that's how we started this sidetracker, by having a community around you. It's been an interesting 2024, and we're now into 2025, the beginning of a new year. What are some of the key trends you're seeing in the Australian property markets that investors should know about to help them make it a good year?
Yeah, look, I guess understanding that the fundamentals don't change. So my game plan, your game plan, our game plan has not changed in the 20 years I've been at Metropole, Michael. It just hasn't changed. The fundamentals are always the key components that we turn to for guidance, the top-down approach, buying in the most affluent areas and locations and things like that as well. In terms of market insights, I think all markets, it's amazing. Those fundamentals are so heavily one-sided at the moment, aren't they? There's so many people moving to this country. There's a huge housing shortage and crisis, which is really, really unfortunate for a section of the community. Unfortunately, that's just the reality of the situation. But I kind of see most of the market having done 60, 70 odd % in the last probably 3 or 4 years. I do see an opportunity in Melbourne. Melbourne's probably the only market that hasn't done that. And if I'm looking at a graphic that tells me that Melbourne's the 5th most affordable state in Australia, I find that quite incredible, and I think that's going to change. Probably not the next 6 or 12 months, but certainly over the next 5 years, that'll probably regain its position in the market. So I see that trend happening, and I don't see human habit changing. I don't see people are still going to live close to work. Sure, there's technology and work from home, but if you just stick to the big trends, those big trends don't really change, and I don't see that changing in the next decade.
Sure. Well, even probably longer than that. Now, I know you work closely with our research team, our property strategy team, and then eventually the buyer's agents. But the buyer's agents are really just implementing the strategy that the wealth strategists and planners put together. And there isn't one strategy. We don't have a stock list at Metropole. It doesn't matter to us whether the clients buy in Melbourne, Sydney or Brisbane. It doesn't matter if they spend $500,000 or $5 million buying a property. It also matters upon where they are, what stage of their life or their investment journey they are. If they're close to their retirement age, sometimes we say it's not the right thing to buy a property. But last year, there were over 500,000 property transactions. I know you excluded a huge percentage of those that our team wouldn't even look at. So what criteria do you use to identify the right locations and then the right properties to invest in?
Yeah, great question. We pride ourselves in finding that kind of needle in a haystack, that really unique property that really, it stands out for us. It's incredibly difficult to find. It is a needle in a haystack because you've got to go through hours and hours of research and property and things as well.
Can I interrupt you for a sec? I apologise, Brett, but you are right. It is incredibly difficult to find. And I'm fascinated when I read on social media some companies saying we buy 50 properties a month. We couldn't find 50 properties in a quarter, and definitely not in the same country town, the same regional town. They can't all be investment grade properties. So be wary of people who say, hey, we've got the volume, we've got the bulk, we've got the off market properties on our side. They don't even travel to those spots in many occasions. And the local estate agents love them, as do the vendors in those areas.
Yeah.
So I think your point, I'm sorry to interrupt your train of thought, was the fact that it is currently even more, it always has been hard to find the right property, but currently it's harder than it has been for a long time.
Yeah, it has. It has. And part of that is the location. So first of all, we've got to get the location right. That does 80% of the heavy lifting. So, we're looking for a more affluent location with rising incomes where there's a huge amount of demand because of jobs being created. And we all know that 80% of jobs over the next decade are probably going to be created in Sydney and Melbourne, and Brisbane's catching up a little bit. That trend's not going to change. So why not find somewhere where there's no more land available? You can't build another 1,000, houses or complexes or units or whatever. Public transport infrastructure, great school catchments, strong land to asset ratios. They're cliched things, and they're difficult to find, and people compromise too much. But even when you find that, you're going to get an average good property, a great property. How do we outperform the averages? By getting into the best streets and the best pockets. And where we are in Brisbane, Michael, in Clayfield, an amazing suburb in Brisbane, 5 minutes to the airport, 5 minutes to the CBD, but we actually only buy in 30% of the suburb. Some of the suburb floods, there's a train line through the middle, there's a couple of main roads. There's also some zoning issues, and the last thing you want is waking up one day with 100 apartments behind you. So we've got to get into the quiet, tree-lined streets that people are willing to get emotional about and pay $40,000 or $50,000 too much because they know they're going to be there for 10 years. They want to get into the close to work or the train line or a good public school or transport, things like that as well. So we just don't compromise on all of that. And it's like a jigsaw puzzle. Sometimes we find an amazing location, but the property doesn't really work that well. And other times we find a beautiful looking property, but the location's not right. So there's so many different layers we've kind of got to get right. And in many cases, we have to find a reason to say no. I think too many people look at property and find a reason to say yes, rather than trying to rule things out and find the last man standing or the last house standing.
Well, a lot of people believe that data is important and don't let emotions get involved. Now, you often say, Brett, that property investment is part science and part art, and the science is the data. But if people only go on data, they don't see all those things that you just said. So the data talks about a suburb, but not about a street, or not about the north side of the street that's got magnificent views and the south side of the street's got magnificent views of the houses on the north side of the street. So you can't do this from the internet. You can't buy sight unseen. Buyer's agents can't do it by just speaking to the local selling agent and doing a FaceTime call. I bring this up occasionally on our chats, Brett, because I'm horrified by how some people buy properties. Now, at the moment, that's happened particularly on the west coast of Australia and in Adelaide. But I know over the years you've also seen that in Brisbane, where people from down south haven't even bothered hopping on a plane, but buying properties that you'd laugh at.
It just amazes me. It honestly does, Michael. It really does. I mean, you're spending $1 million and you're not even looking at, coming to the area or know the area. I mean, a good example is probably you and I, right, Michael? I mean, we purchased a property for you a couple of years ago. You trusted us to find that property for you. You didn't just come up. I could have told you half a dozen suburbs. You would have come up and had a look, but you trusted us. We knew they were on the ground. We bought in the best pocket, in the best street. And likewise, when I was going to buy in Melbourne, I trusted yourself. I trusted our buyers agents in Melbourne to find the right property. I could have used all the data to find the right suburb in the right area, but I didn't know that it was on the wrong side of the street or the right side of the street, or there was something planned for that location. So it's really interesting.
Well, since you bought in the suburb you bought in, there's been a new train station come up. Again, knowing what's going to be in advance. So rather than looking at the retrospective data, but seeing the gentrification of the suburb, the fact that a working class suburb has now got more affluent people coming in. So it's not just affluence of the people living there, but new people coming in that makes a difference. And that doesn't show on the census data or the other data. You've got to actually be able to see what sort of cars people are driving, what sort of dogs they have. Have they got cavoodles or have they got Rottweilers? It gives you an indication. I read a very clever article ages ago about one of the signs of gentrification is the sort of the dogs the new people.
I think I saw that one. Yeah. But the other thing is some of these streets. I've been driving down these streets for 10 years looking at property, and to drive down a street and 1 minute there's a house there, the next minute it's been knocked over and subdivided, and then someone over here is renovating. That gentrification, you don't just get that off from a one-off trip. You need to understand how that kind of works, and obviously things like dogs and cars also help.
Sure. So. Again, we talked a lot about your role, and congratulations on having moved up from a property investor to now being, let me put it in my words, an industry leader that the media approaches, that clients are proud of, and that other people in the industry want to work with. And you're leading a team of property strategists, wealth advisors, and then only afterwards the clients end up buying a property if it's appropriate for them. We don't have a stock list. So at Metropole, your team, my team, are much more than buyers agents. We help our clients safely outperform the markets by giving strategic wealth advice and then helping them to keep the properties, keep their wealth, pass it on to future generations. But we implement that plan with on-the-ground teams of people who know. So we're much more than just buyers agents. And if you're keen to have Brett's team help you make this year, well, actually more than this year, your future successful financial freedom, why not go to metropole.com.au and have a chat with one of our wealth strategists? It's obligation free to understand. And this is for beginners. We definitely help home buyers as well, because even though home buyers are emotional, we've got separate buyers agents, a separate team of people who are very understand the needs of home buyers, because your emotions are allowed, but you also should be thinking about it with a investor mindset, because often your home that you're looking at now in 2025 is not going to be your forever home. So it's the stepping stone, just like your investments are as well. So let us help you safely outperform the market and see clarity in the chaos that a lot of people are currently mentioning. Go to metropole.com.au. Brett, maybe just to finish off, is there an example of a client, somebody you'd like to share a story with, a case study of somebody who's done well, just to inspire people to think, oh, that's okay for those guys to talk about it. It couldn't be me.
Yeah, look, I've obviously got a number of clients. I think the first one that comes to mind is one of the guys I spoke to last week, Jeff. And, I bought a property for Jeff probably about 12 or 18 months ago. We modeled some scenarios for him. He really worked hard and scraped together a deposit. And we bought a house for him in Brisbane probably about 18 months ago. And we planned out in the next 3 to 4 years that, if he saved right and did the right thing, we could buy another property. But the way the Brisbane market's gone, we're actually able to bring that forward, because I guess if we just bought an average property in an average location, we probably would have had to wait a little bit longer. But because we bought the right property, the right area, the right location, he probably made an extra 20% on that property. And it actually enabled him to buy another property within 18 months. We'd forecast 3 or 4 years. And that's what really excites me, when things work out and we help our clients not only get the first property, but also the second property, because the market's done well, but we've done better, and we're able to, get him we've brought him into a Brisbane market, which was, rising. And now we're actually getting him into a cyclical opportunity in Melbourne. And he's kind of hoping to do the same thing. So that's really rewarding for me. It's not, making millions of dollars. It's just those little things and getting people on the right journey.
Well, Brett, that makes me think that probably we should actually do another show real soon about the sort of properties we buy, not to show off, but to actually give the background information about what goes on in the property strategist's head and then the buyer's agent's mind when they select a property. So I look forward to catching up with you again next week, Brett.
Sounds good, Michael. Thanks for having me.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I want to actually discuss something probably a little bit alternative, maybe a little bit different, but the concept that your life is on rental and life is a zero-sum game. I mean, if you think about it, when the time finally comes, you're going to leave everything behind. The wealth you've created, the grudges you hold, even the people you love, aren't things that you can take with you. So then my question is, why do we spend so much of our time controlling these things when they're all going to be gone? If you know that you're going to leave behind the money, why are you so absorbed and stressed over gaining more than you need? Now, I understand that for many of us, including me, you're wanting to leave a legacy for others, but I'm just wanting to discuss a slightly different perspective so that we are focused on other things in our life as well. So I'm not saying it's bad to try and gain assets, but I'm saying be careful what you focus on. Instead, maybe you could be focusing on spending time being happy. I guess that's something it's taken me many years to realize, because I was very driven to build a very large asset base and to prove myself. But I guess as I got older, I realized that life is a zero-sum game. We've come here with nothing and we're going to leave with nothing. And your life and everything you own, including your body, is essentially a rental. And it's up to you to fully appreciate it while you're the tenant. There's freedom in thinking that nothing is yours, because then nothing can be lost. Experience things while they last, love them, and then let them get on with their own life. Letting go of attachments makes your life richer as you create space for new experiences to come in. This also means that when you encounter times of illness, of hardship or loss, you realize that these moments of darkness, they're temporary. Nothing is here to stay. So the message today isn't not to strive to be better and to be more successful, but to be more balanced and choose to live your life so that every experience that comes your way is enjoyed, because you see it as a rental and you appreciate the moments when they're there, embrace them and learn from them. But maybe you can't keep them. See, your focus shifts from living in fear and not having enough to living in abundance as you realize that everything you need is already within you. As I said, a slightly different way of thinking about things in today's mindset message. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this, or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. Oh, and I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcasts, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?